All right, good afternoon. Thank you for joining us today for our Business Owner Advisory webinar. My name is Russell Lindsay, and I look forward to a productive discussion today. This is our 8th webinar, and our goal each week is to provide up-to-date and timely info to help small business owners navigate and manage their businesses during these crazy times. If you are new or weren't able to join us over the last 8 weeks, our discussions have covered topics centered around relief for small business owners. I would like to take a second and say thank you to all of our regular attendees. We are very thankful for our relationship and the depth of our relationship with you. As you may or may not know, we are posting the replays on our website at canopy360.com. So it's got the webinar along with the complete notes, and you can find that under the COVID-19 tab on our website. Our goal is to have a complete reference library on the PPP when we are finished. Typically, today's webinar, for example, will be posted to our website by the end of the day with the notes. So do you have a small business owner that you're friends with that may seem lost on how to calculate their forgiveness? Or maybe they received the PPP loan and now they are stuck and don't know what to do next? We would really appreciate it if you would invite them. So would you feel comfortable inviting them? Our next webinar is June 17th. And I was just talking to a client and one of our accountants earlier today about just how complicated putting together the loan forgiveness application is. You know, when we originally did the applications, it was 2 pages to get the loan, and now it's 11 pages to apply for forgiveness. So, you know, who knows, if you invite your friend, it might just be exactly what they needed to put them in touch with these webinars and you know, help them. So please, we welcome you to invite your friends. Just a reminder, we are taking vacation next week, so we'll be back in 2 weeks, like I mentioned, on June 17th. So please set your calendar now so you don't miss out. Today, our discussion is going to focus on a new law that passed the House last week and is rumored to be voted on by Congress in the coming days. So stay tuned for today's discussion. We're calling this the PPP Flexibility Act, and I'm excited to share the details with you. We'll also drill down on some questions from past webinars about specific expenses that can be used with PPP funds. And as a reminder, about 20 minutes after the webinar, you'll receive an email with a survey. And if you could, please, would you help us out and take just 2 minutes to complete it? And we appreciate your feedback on this survey. I will stop promptly at 1:30 for questions, and you can use the Q&A button at the bottom of the chat, so you can submit your questions as we go through our discussion, and my teammate Becca will help us monitor the questions as we go through. And for many of our regular attendees, this Q&A session at the end is their favorite part, because we do tend to get quite a bit of participation, and you're able to ask questions and get answers on the spot. And I think it's helpful, we've found, because there's a lot of small business owners on here. So you get to kind of not only ask the questions you're thinking about, but also see what questions they may be thinking about that maybe you thought of or maybe you didn't. If for any reason we're unable to answer your questions, we will, don't worry, we will make sure that we note any questions that we need to research and provide clarification. And we have typically been responding to those questions within a day or two after the webinar's completion. My name is Russell Lindsay, and I'm a CPA and one of the partners here at Canopy 360. And our team consists of 28 of us, and we work and target to advise small business owners and their families on advanced strategies in the areas of accounting and tax, consulting, financial planning, and wealth management. All right, so let's get started. Like I mentioned, on Thursday, May 28th, so a little over a week ago, the US House approved legislation to add flexibility to the PPP loan program. I've heard and was doing a little bit of research, I've heard that the Senate expects to vote on this Flexibility Act soon. So it's nothing like being midway or 3/4 of the way through the game, and nothing like changing the rules in the middle of the game. So, but let's just roll up our sleeves and we'll analyze it. I do think there's some helpful stuff in here, so I'm excited to share it. So what are some of the changes being considered? So these are changes that are being considered. They're not in place yet. So the measurement period being extended from 8 weeks to 24 weeks. It is important to note that there is a similar bill in the Senate that would change this period to 16 weeks. So in either case, it sounds like we're going to get an extension of the measurement period. The act also looks to lower to 60% from 75% the portion that would be required to be spent on payroll costs. A Senate bill would keep that percentage at 75%. So we'll see where we land on that. And then the House legislation is also looking to more than double the loan term from 2 years to 5 years. So that would be for any money that's left over that is not forgiven. You would have up to 5 years to pay it back if that change is implemented. Here's some more changes that are being considered. So in past webinars, we have emphasized quite a bit the importance of businesses, making sure they have the same amount of full-time equivalents or FTEs at the end of the measurement period as they did prior to the loan. So this new act does extend the time by which a business is able to, quote unquote, fix or replenish their FTEs from the deadline to fix them being June 30th. This new act is moving that deadline to December 31st. So what does this mean? If a business had 20 employees before the virus, if that business reduces its workforce to 10 employees during the measurement period, the business is still able to receive full forgiveness of its loan if it spends what was borrowed on payroll, health insurance, interest, rent, utilities, and retirement plan contributions, as long as it started before the virus with 20 employees, it had 10 employees during the measurement period. Well, as long as by the end of the year they're back to 20 employees, they can still get full forgiveness. Another interesting aspect of the Senate bill is that it would add as an allowable expense money spent on personal protective equipment, PPE, not to be confused with PPP. PPE is an allowable expense, could be an allowable expense. And then the final change under the bill would be that borrowers will be eligible for the deferral of payment of the employer's share of Social Security taxes, regardless of whether the borrower receives loan forgiveness. So this allows borrowers to defer the payment of the employer's share of the Social Security tax until 2021, and you'd pay half of it then, and then you'd pay the remaining half in 2022. So that would be a neat little thing. So to clarify there, so you're counting the full gross pay as a payroll cost for your employees. So that includes the Social Security and Medicare tax that you're deducting from their pay. Well, the business also pays 6.2% in Social Security tax on the wages. And so you would be able to get full forgiveness on the gross wages, which would include the employees' taxes. And then you would also be able to delay the payment of those employer Social Security taxes. So that would help you, if you're trying to dig out of a hole, that would help you postpone those costs until later years. But I do want to point out you still would have to pay that in the future. So what might these changes mean for you? This is where we want to start thinking ahead and try to be proactive, because it does look that there's a very high degree of certainty that some form of changes are going to pass. So what does it mean? So the change in measurement period from 8 to up to 24 weeks, I feel like it will make it a lot easier for borrowers to get close to full forgiveness on their loans. So that's a good thing. I had the discussion with the other day with a client, because they're working in states that are still under quarantine, and so they've been paying their employees to stay at home and not earning any income for the business. And so he was saying, well, I don't have money to keep paying them after the 8-week period if we are not back to work full time. So the good news is there's a piece in this legislation also which would allow businesses, even if they do go up to a 24-week measurement period, it would allow businesses to still pick an 8-week period. So for this particular client, he'd be okay. He could make that election and just apply for forgiveness based on the 8 weeks that he spent the money, even if they do change it to 24 weeks. With the change from 75% to 60%, this act will also allow, obviously, for more money to be spent on rent and utilities and less on payroll. And then, I'm hopeful that these proposed changes won't create any challenges, though it is important to note that it might make it more challenging to keep a full workforce in place until December 31st. So, time will tell on this change and if it makes it into the act. And I'm curious, if it does make it into the act, if there will be any kind of get out of jail free cards on that one. Just like they are, allowing for us to pick the original 8-week period, if they move it to December 31st on the full-time equivalents, hopefully it won't create any challenges there. So whether we stay with the 8 weeks or we go up to 24 weeks or maybe land at 16 weeks, I still think it's really important to have the answer to, when does your measurement period start? So the measurement period starts on the same day as your PPP loan when it's deposited into your account. So what if you receive your loan on multiple days? Well, you're going to count, if you received your first deposit or your full disbursement of the loan on Monday, April 20th, then that's going to be the day that your measurement period starts. And then the last day will depend on this Flexibility Act as to how many weeks they go. This gets us into another interesting question we've heard a lot, which is, what if my payroll schedule doesn't match up with my measurement period start date? And so the SBA actually made a convenient adjustment here. So what if your payroll period and measurement period don't start on the same date? you're probably like most businesses and borrowers that fall into that boat. So the fix, what's the fix? Borrowers may elect to calculate payroll costs using the measurement period that begins on the first day of their first pay period following when they get the loan disbursement. So this is a good thing. For FTE headcount, we talked about, should we use 30 hours or should we use 40 hours? The application does say use 40 hours for FTE, so that is very clear. And then the simplified method, we'll talk later about an adjustment that we're going to make to our, we're going to create version 3 of our calculator, and this is something that we're adding into our calculator. So the simplified method simply allows us, instead of using 40 hours for a full-time equivalent, what we can do is if an employee works 40 hours, we use the number 1 for them. And if the employee works anything else other than 40 hours, we use 0.5. And so, that does help with the employees that are part-time. So our calculator, our version 3 of our calculator that we expect to come out in the next week or so, will address this and will calculate the FTE both ways so that we can make sure that we're using the most advantaged way. So we definitely will include that in the next version of our calculator. All right, so we've been asked this question a lot, quite a bit, and we do have clarity. Can I pay bonuses with PPP funds? So the answer is yes. Just make sure you stay under the limit of $100,000 per employee for the year. And so one tip, and this is pretty interesting also. So a bonus can also be included on the pay period following the end of the measurement period. So this is interesting. So if you get to the end of your measurement period, and this happens a lot with businesses, and let's say your employees earn a bonus as of the last pay period date, which also corresponds with the end of your measurement period. And let's just say something is preventing the timely calculation of that bonus, where the calculation of the bonus occurs and is not completed until after the end of the measurement period. Well, as long as you pay the bonus on the pay period following the last measurement period, you can still count it as an improved payroll cost. So that's a good, that is a really good measure there. So we're glad to hear that bonuses can count, and we're also glad that we can kind of, do that, have that little bit of extra time if we need to calculate any bonuses at the end of the measurement period. We talked about this last week. I wanted to hit on it again, just to emphasize, we've had the question, I haven't paid my March or April rent and it was due before the measurement period. Can I use this expense in the calculation of my forgiveness? There are probably going to be quite a few examples of these kind of transactions. So maybe it'll be rent, maybe it'll be a utility bill or a loan payment. And so the loan forgiveness application, it specifically says an eligible non-payroll cost must be paid during the measurement period, or, and then we'll underline or, incurred during the measurement period and paid on or before the next regular billing date, even if the billing date is after the measurement period. So that's kind of like the bonus situation that we just talked about. There is a little bit of catch up even after the measurement period starts. So, I'm really excited about the proposed changes. when you think about it, if they give us this extra period of time for measurement period, if they allow us to count bonuses and also calculate bonuses after the end of our measurement period, and then they also allow us to count these expenses, it seems to me as if everything is leading towards, as long as you can keep your FTEs correct, you'll be able to get full, close to full forgiveness. So I'm really excited about all of these potential changes. So we have been emphasizing for quite a few weeks developing your business strategy on your PPP loan forgiveness. So I would ask you to think about, do you have a business strategy for how you're going to calculate the loan forgiveness? We have a client that's got to turn in, at the end of their period, unless these laws change, the end of their period is in about a week. So we've started working on their loan application, and it is really complicated. So I would say, make sure you are thinking this all the way through and looking at the application. So what are your options? You can use our complimentary Canopy 360 PPP loan forgiveness calculator. So just put a note in the chat box, or there'll also be a link in the email that we send out following this webinar, and feel free to request a copy. The other option is you could hire us to calculate your PPP loan forgiveness and documentation. And with that service, it is a service that we will do all of the calculations for you. We will consult with you on how much we think you will have to pay back and how much of your loan will be forgiven. And we'll also put together all the documentation and have everything ready with your application to submit to the bank. So if you would like to talk about that service, John Golden and Tanner Emmons, my teammates, their emails are on here, and you can reach out to them. John's kind of explaining the service and talking through what to expect in the process, and he can go through all the ins and outs of that and help you determine if that's something that would be helpful. And then Tanner's actually doing all the calculations. So if you'd like to discuss this service and hire us, please feel free to send John and Tanner an email. So we have a few topics to be determined in the future. So what topics will we cover in the future? We will definitely be following very closely this flexibility, the PPP Flexibility Act, and when it has been passed by the Senate and the President. We fully expect it will. The question just remains, which changes will stick, and then how will those changes affect your PPP loan forgiveness strategy? So stay tuned. We're working diligently on version 3 of our Canopy 360 PPP loan forgiveness calculator. While version 2 is good, we think version 3 will be great, and our plan is to mold it to the PPP loan forgiveness application as best as possible, with the goal being it to help with providing you the information you need to complete the application as easily as possible. So what does our future webinar schedule look like? Our goal is to come back in 2 weeks from today on June 17th, and our goal is to wrap up the PPP webinar series on this day. Given that we are, God willing, June 17th will be the end, but we are also setting aside July 1st as a backup day in the event we need to utilize this day as the final webinar for this series. So adjust your calendars accordingly. Hopefully next time we get together in 2 weeks will be our last day, but if we need to go to July 1st, we will have another event that day. Okay, so let's, that wraps up our discussion for today. We're a couple minutes early, and so let's get to your questions. I want to encourage you to ask questions because this helps us to plan ahead and know what questions you have that we still haven't answered. And remember, if you have a question, you can go to the Q&A at the bottom of your screen and submit your questions. So let's jump into the questions. All right, so there's a question. Can you use the simplified method to find baseline FTE and then the regular method when calculating FTE for forgiveness? I ask because if you use the simplified method and an employee worked 35 hours, it's 0.5. And if an employee works 38 hours, the regular method would be between 0.5 and 1. This would increase FTE for forgiveness. Or if you use one method, you should stick to that when figuring FTEs. That's a really, really good question. The way we were contemplating setting up the version 3 of our calculator was going to be that we were going to, when we look at the baseline period and when we look at the measurement period, we were going to assume that you use the same method for both. So I see exactly what you're asking, and that's a really good question. And I think the answer is going to be on our loan forgiveness application. So we'll have to look into that and get back to you on the specific answer to that question, because that's a good thought that you have there. Okay, wow. So either I did a really good job or there's no questions. Let's see, I'll give it just a minute more. If you have, I would say if you have any more questions, please submit them. Okay, here's another question. Is there any further clarification in the Flexibility Act that addresses businesses who furloughed staff and have had staff refuse offers to return to work? Explained in the SBA 5A, will a borrower's loan forgiveness amount be reduced if the laid off reduced hours and employees decline return? So I have seen specifically that if you can, as a business owner, document in writing that you've offered the employee to return to work, and you can get them to respond in writing that they're declining to return, then that will not penalize you for the FTE issues. So, so my point would be, you want to make sure that you get that in writing to back up in the event that you are audited. So what I would say is, make sure you get it in writing, even if it's an email or a text, even a text maybe, it's in writing. You want to say, hey, we're offering you to come back to work, and have them say, I'm declining to come back to work. That way, if you have it in writing, you can prove that you've offered the job. I think if you can do that, you won't have any issues with the FTE. If I hire Canopy 360, then how often should I expect to get updates, or how often do I need updates on my PPP loan calculation estimation? So that's something that is a little bit different for each client. So what we typically do is get you set up, and then and then do your, sometimes clients are hiring us and they're 3 weeks in, but we do an initial call, or do an initial calculation, and then we'll do an initial call and say, hey, here's how we're estimating you going forward. And then we've kind of, then we tell the client, hey, and we need to be working on this and this and this over the rest of the measurement period. And so we give them a little bit of advice. And then after that, what we're doing is we're maintaining the calculations internally, and just kind of working with the client based on an as needed basis. If the window is extended past 8 weeks, then I still want to get my forgiveness PPP funds spent ASAP, because I can't deduct funds used in the window on my tax return, right? You are correct. So so when the loan gets forgiven, the forgiveness is not income to you, but also those expenses that you are paying with those funds are also not deductible. Now, as far as to the point of you want to get the funds spent ASAP, I think if you have enough payroll costs and non-payroll costs to spend the money sooner rather than later, then I would tend to agree with you that getting the forgiveness applied for and behind you sooner rather than later makes sense. Hey, David, any update where your PPP payment was received mid-work week and you used PPP funds to pay that work week that started before receipt of PPP funds and ended in the week after receipt of PPP funds? I got the application right in front of me, so I'm just taking a look at it real quick. I think you and I should chat about that, David, off webinar, and we can talk about it. All right. Any last questions? David, I'll chat with you because I want to kind of have a back and forth kind of question and answer with you off the webinar. All right. So I don't see any more questions. I don't see anything in the chat. If you have any last questions, feel free to ask. Okay, so our next webinar will be June 17th. So we hope you found today helpful. We appreciate you guys joining us. And if you could, just as a reminder, I don't see any last minute questions. Could you please just look for the survey in about 20 minutes, and we appreciate your input. And we look forward to hearing what you have to say in our survey. And if there are no other questions, we appreciate your time and hope you have a nice day. We'll see you in a couple weeks. Take care.